it is my pleasure to get us started with our first session of the Digital Forum. We've always said that 2023 is going to be the year of credit union-led buy now, pay later, and we have seen this really come true. And so to get us started and to give us an overview about the state of the state, joining me on this virtual stage is our founder and CEO, Bryce Deeney. Hi, Bryce.
Hey, Jazzy.
All right. Well, you know what? It doesn't get more exciting than this. We have over 3 million consumer checking accounts represented in the room with us today.
Yeah, it's incredible to see the growth. As a founder and as a former credit union executive, it's just incredible to see how many people have realized what's happening in the buy now, pay later market and how it's better from the trusted credit union.
Absolutely. And you know what? Let's get started. Let's dive right in. We know that buy now, pay later has seen really unprecedented levels of growth and adoption in the recent years. But let's really anchor down, especially, right now, August 2023. What does it look like?
So from a BNPL perspective, it has a 25% compounded annual growth rate. We haven't seen anything like this since, if you remember, like when Cash App and Venmo became popular from a P2P perspective. And then eventually financial institutions started leading the way through P2P fintech partnerships. But the reality is with BNPL, for decades, consumers have had three options at checkout, right? Cash, debit, and credit. Now that paying over time with installments or buy now, pay later has increasingly become available, consumers now have this fourth option, and it's obviously growing in popularity.
Absolutely. And that's huge. I come from the e-commerce space more toward the purchasing side, and now being able to see this in the payment space. Like, we know on the commerce end that when buy now, pay later is not available, shoppers today will actually abandon cart. They will not complete that purchase. That's how important this kind of flexibility is to them. So, given that and this current climate, how are we seeing these type of offers evolve?
Yeah, a few years ago, everyone thought of BNPL as like this free alternative to credit cards, right? But in the current macro environment, 2022, 2023, what we're seeing is the average APR for these short-term installments is actually crept up, surpassing 15% APR, some of which are now even at 30%. We've seen a significant shift the last 12 months where BNPL is no longer just this pay in for model, but they're increasingly longer terms, higher APRs. One example is Affirm, one of the largest BNPL providers in the US. They have 16 million current monthly active users. Their APRs range from 10 to 30%. Now, keep in mind that Affirm is originating these loans at the point of sale for net new consumers, meaning they don't have insights and relationships with these consumers like a credit union or a bank do. And yet, even in the current macro environment, they're able to keep these 30-day delinquencies below the likes of companies like Capital One, Discover, and Synchrony at 2.5%. For Equipifi and the credit unions that we serve, they're able to offer a better product, a more fair product at a lower fee, with even better underwriting than the third parties, which is it's amazing to see. And it's a huge win-win for the consumer.
Wow, that's incredible. And really, if this is what we're seeing from third-party BNPL, I cannot, overstate just how much better it is coming from credit unions. And given that, what would you say are the reasons why consumers choose buy now, pay later over other traditional payment methods like debit and credit cards?
Yeah, obviously debit and credit cards are kind of the pillars, but if you really take 2 clicks in, 43% of credit card users who carry a balance, BNPL becomes a very attractive way for them to take advantage of a plan that tells them upfront exactly how much interest and fees they're going to pay for that large ticket purchase. But obviously Equipifi, for the 60% of Americans who use debit cards for all their major purchases, BNPL really is the only option for them to spread their payments out. For years, these consumers had only a few options, right? They'd pay with a debit card, get a personal loan, or they would apply for a credit card. One interesting thing that we're seeing is BNPL not only allows the consumer to understand upfront exactly how much they're going to pay, but it reduces the friction to where now they don't even have to apply, right? If the credit union or bank has the data, now it's just a 30-second experience for the consumer, which is, increasing in popularity.
Absolutely. And speaking of popularity and preferences, once upon a time in January 2022, we had a very, very interesting article come out by payments.com. And it said that 70% of BNPL users would actually prefer this from their primary financial institution. Now, at that point, we had just gotten started pretty early in the game as equipifi. And I was wowed at, how much that vote of confidence was already there. So now that we're, almost like a year and a half later, we have been going live with dozens of credit unions. And are we seeing this validated?
Yeah, the results honestly even shocked our team. Consumers who use third-party products like Affirm, Klarna, and PayPal immediately begin to use their credit union's buy now, pay later when it becomes available. In fact, one of our credit unions that we partner with, when they launched, their members used their buy now, pay later more than Affirm and PayPal combined within the first 30 days of launching. But we're seeing something even more interesting, which is financial institution buy now, pay later covers all demographics. You heard earlier Martin talk about next gen consumers, but for BNPL from the primary financial institution, it's being used by all demographics. We see that 21-year-olds are paying for their expensive college books using BNPL. Millennials and Gen X are using their credit union buy now, pay later to cover healthcare costs. And we're seeing 18% usage on travel across all generations. The use cases from a financial institution is greatly better or greatly larger than what we see from third parties because it's tied into that debit card, which is really, really powerful.
Absolutely. And I can very much see how this is a very much a budgeting tool. And, to take this a little bit further, we're obviously all aware of companies like Affirm and PayPal that they're trying to become, the center of consumers' wallets. If everyone takes a look at the screen right now, these are just some of the more recent articles about how they're moving into buy now, pay later. Now, coming from the point of view of a financial institution, especially one that's trying to unlock my own buy now, pay later, how should I be thinking about headlines like this?
Yeah. So, if you've done any research over the last couple of years, companies like Klarna, Affirm, PayPal, Afterpay, Square, et cetera, are kind of the 500-pound gorillas in the room, or at least we thought. And then companies like Amazon, Walmart, and now recently Apple stepped in the game. So really, what is their goal here? Well, enterprise companies like Apple are trying to become the center of the transaction for the consumer for a couple of different reasons. But their primary reason is really just to provide flexibility to the consumer so they can sell more product. But if we look into Apple a little bit deeper, for instance, they're unlocking that particular purchase, but it gives Apple the ability to then cross-sell their other banking products. I know that they don't like to use that word, but it's a banking product, right? Their high yield savings account, their credit cards, and they're going to continue to creep into this landscape and try to become the primary FI for as many consumers in the US as possible.
I mean, if you were to tell me months ago that one day I will be going to places like Walmart and Apple and treating them like I would see a financial institution in some ways, that would shock me. But increasingly, we're starting to see that this is part of their play. So definitely helpful to get that perspective, seeing these headlines come out. So let's shift gears a little bit. I'm about to break a marketing cardinal rule. I'm about to read a slide verbatim. So remember this slide. All else fails, remember this slide. Consumers are using buy now, pay later with or without their primary financial institutions getting involved. And now that fintechs are becoming lenders, banks and credit unions risk being displaced. We know back in the day, we knew when we started that buy now, pay laters would look different coming from financial institutions. And, this year specifically, the partnerships with all the credit unions that we've been working with have really been able to inform and help us learn and create together what this product might look like. It's been amazing.
Yeah, Jazzy, we're seeing more and more members use the product every day as we, turn on more and more credit unions. What's fascinating, and this is a stat we're not sharing publicly, but we are sharing with, our customers, and our customers are seeing a 9% month over month growth in their buy now, pay later programs, which, just to take a step back, that's 250% growth year over year. Members are using it. They're logging into digital banking more. In fact, the BNPL module that we're unlocking with all of our digital sponsors here today, members are logging in sometimes multiple times a day to view their offers and manage their BNPL plans. It's truly a very sticky product. But more than the growth, I'm more excited about our roadmap, which obviously, everyone's going to hear later on this call. Our roadmap is driven by those of you here today, right? Our partner financial institutions, and who we lean on very, very heavily for ways to increase engagement, stickiness, and adoption, and ensure that you stay top of wallet. So, last thing I will say is, this is obviously just the beginning.
Yeah.
Debit card BNPL is already the preferred payment method now for a ton of members, and that's going to continue to grow.
Absolutely. And it's just been an absolute pleasure seeing, all this rolling out and all of this responses over the last couple of months. So, well, thank you so much, Bryce. That was incredible. Take
Thanks,
care.
Jazzy.